following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here at noon until 1 p.m. every market day. What an interesting market this is. Yesterday squeaks to a new all-time high in the Dow, S&P, the E-mini. Let's look at what we've got here. My immediate response to the last 5 sessions or so, every single day is, so there's residual strength. The market is moving higher, but it's starting to really struggle to get those extra highs. But all-time highs, all-time highs tend to beget all-time highs. That's the way it works. That's when you look at the new highs list, the new lows list. When the market's moving up, the new highs list expands, and the same characters are there, plus new invites. On the way down, it's the same thing. The new list of lows just expands. And right now, what we're seeing are higher highs and higher lows, and the proportion of stocks that are leading to the upside might not be as great as normal. But if you think of it as a rotational, high-level combined correction and refunction, in other words, areas that were weak have been rallying. We've seen how the gold dropped very sharply, and all of a sudden it's moved. The gold stocks are moving well. We're going to talk about whether this is a bigger move or a smaller move. I promised yesterday that we would look at, I wanted to talk about the socio-economic political aspect. You know, there's time for that. I ran out of time yesterday. I'm not going to make a rush out of it. I want to talk about close. I want to talk about verbiage. I want to talk about a very slow move to the right. That is a more conservative move. You would not know it by the way people speak, by the words that are used, by the vulgarities. Any other time they would be called vulgarities. At this particular point, they're ho-hum, that's the way people talk. No, that's not the way people talk normally. It's only in a period where anything goes. Remember the Cole Porter song from the early 1930s, Anything Goes? And I've been talking about this particular phase of the match between the 1920s and now. And the other thing I'm going to talk about, I'm not going to be in a rush to talk about it, I'm introducing it today as a concept, is that there is a mega bull market move in many, many countries. Look at this. This is the Great Britain GBDOW. This is Dow Jones Great Britain Index. Look at that. Leg C, not an all-time high, but really close to the all-time high from June of last year. I'm sure that this chart goes exactly when I've seen it with the FTSE 100. So this is the Dow Jones comparable version, Dow Jones UK Stock Index, almost at an all-time high. If you go to Germany, that's DEDOW, hasn't gone to the all-time high that was made. But this, the way I'm looking at it, I don't know how to call this new leg to the upside other than in the weekly, other than leg A. Leg A, are you telling me that this can go all year to a D? Yeah, it could, because there's a cup formation forming, and it's really quite exciting. So I'm suspecting that throughout the world, people are going to start trading, and they're going to be trading mostly United States stocks, but their own stocks as well. And at some point, that's going to create that final coda phase. How long it lasts for, I don't know how long it can last. And usually those phases go for 3 to 6 months, like in December of 1999, going into the March high, January for the Dow, and then the March high of the S&P. and the Nasdaq. So I don't know, and am I saying really it's all over in this time next year we're looking at a depression? No, I think it's going to last a lot longer than people think, and it's going to go against every single conceivable. I mean, even I, who try to be as objective as possible when I'm looking at politically, when I'm looking at it, I try to look at both sides. I try to understand it. I'm from Newton, Mass. This is one of the most liberal cities anywhere besides Cambridge, Mass. And I try my best to look at all sides of the coin. And I have to tell you something that this is the most fascinating political phase that I've ever seen, and I've been here a long time, ever since Watergate. So that's a long time. All right, so let's go. The Dow's up 18. I wanted to introduce that. You got the let me do this one at a time. INDU. Here we go. The Dow is up again. It's no, it hasn't extended leg E because the high was 22,850 yesterday, and today's high is 22,851. It just did it while we're speaking. Leg E is extended, and that's what I said to subscribers. We're going to try to keep our long positions as long as possible. We've got only going to go short now. We did try a very small short yesterday, I think it was, Friday into yesterday. Took a tiny, not even a 0.5%, no, just a tiny little loss, and stayed with the core position for those subscribers who have the core position in the diamonds. Try to stay long for the 22,290s, I think it was. And now what we're looking at, we've extended leg E, and there are only certain conditions that we will start the short side, and that would include probably a little protection, a very tiny protection, which I would like to have at this particular point in the volatility index, if we can get it this morning. This is just an idea, concept that we are starting to get. Look, leg E in the Dow. The parameters upside 22,850 right now, 22,870s to 22,890s. I think that 22,900 is going to be extremely difficult to break out of. That the 24,000 is going to have to wait a while. That's the way I'm looking at it. We'll see what happens. Let's go to the S&P, SPX.X. S&P up 1, lagging the Dow up at 2551.66. Hasn't yesterday's high of 2555.23 hasn't been taken out. Little doji candle. G/C could go to a D, but the upside 2563 would be really a big breakout to the upside. I don't think it's going to get there, but 2539 to 2537 is key support. This is the daily charts. Let's go to the QQQ. Hasn't made a new high. The high yesterday was 148.14. Let me change that. 148.14, and it's trading right now. This is the NDX 100 power shares. Trading 147.68, up 8 cents. I think it's kind of stuck. It's bumping into resistance area here. So I'm looking at this and I'm saying we are really close to some kind of, I've been saying it all week, a digestive phase. What can I say? That's what the technicals, well, the technicals said that this is a strong breakout to the upside. But I wasn't, I was thinking that there would be a lot of resistance coming up in certain areas, and we are getting close to those areas now in the S&P, the Qs, and the Dow. All right, we've got a break coming up. We won't rush this now. IWM, I'll just say the IWM, couldn't find it. Hit the wrong key. I'll be right back. Basil Chapman, Dow's up 17, S&P's up 1. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So where we were just now, when I said the IWM, now normally what I would do, I'd just take one glance at this particular pattern and I'd say, aha, look at that. You've got a Chapman Wave stalk leg formation. There could still be one more little pop-up in the IWM for the neck, and then the head, and then the beak comes plunging down. But at the same time, this has the look of a potential arch formation in the IWM. So what I'm saying is, now, if you don't mind, I'm just going to take a moment here because we're all about education here at TFNN, and I'd like this to be an educational moment because there are particular signs that I look for. Let me explain. You see the daily chart on the left of the Russell 2000 ETF IWM. It's called at 149.96 up 10 cents. Let's forget about all that. And sometimes what I do is I try to erase whatever is there. I don't know what the symbols are. I'll just click on letters. I'll close my eyes, look at the keyboard, and just go click, click, and then just see what it is. I'll try not to look at all to see what the stock is, and I just look at the patterns. Well, if you exclude this part here, this is the daily, this is the weekly, this is the monthly. Look what's going on. The MACD, the histogram, these little vertical green lines are starting to pull back. You see this huge volume on the 27th of September, 66 million. That's the biggest volume I mean, I don't remember what the story was, but that's a huge volume. And then the breakout to the upside. So what I'm looking at here is I say, okay, huge volume and then nothing. But the price went up and now it's stalling, number one. Excuse me. Number two. The slow stochastic at 88% is declining, but over 80% is very good. Look at the unbalanced volume. It made a little double top at that peak D and the peak E at 150.68, pulling back, trying to rally, but it is showing signs of a right arm failure pattern, meaning that the technicals, if I look at technicals, right here where we are today and where we were 5, 6, 7 days ago, are weakening, but they're not breaking down. The unbalanced volume is still at the highs. I'm watching this closely. This is what I'm anticipating. I'm anticipating that the upside is becoming very limited. That's not to say you couldn't break into the 151s, but I am saying from here into, what is the date today? Today is the 11th. Let's say the end of next week, it would not surprise me if there was very limited upside, but we start to make lower lows. That's not to say a sharp reversal yet, but I would say lower lows, and that 148.20 to 147.60, about that area would be very strong support. Once that goes, it's going to be a very quick pullback into the 145 area, and that's really what I'm looking at, unless there are some economic factors, tax cuts, whatever it is, that really impacts the market, but just based purely on the technicals at this particular point. The MACD, the 200-period moving average, the simple and the exponential are rallying, and that's a very big positive. On the shorter term, we've got a little bit of a rally in the 7-period. I must double check here on this particular pattern. Let me just give you this. Nope, not, yeah, that's the one. Moving average 1 line, and I believe it's the 9. The 9-period moving average, that's the simple moving average, it's not the exponential, is now rallying above the 9-period exponential moving average. And that's usually a tip-off to say upside now becoming limited, downside, and you've got to be very careful, the downside is saying, yeah, we could start to make those lower lows and lower highs as a really strong move, going from the 135, 134 area to the 150s, has really just been virtually straight up, and you can see that in the weekly chart. There isn't a peak yet. Even this week, there's a new all-time high. And the monthly chart is very strong in leg E. So the technicals in the weekly are very strong. I'm saying there's a consolidation that could be coming in the IWM, and that's going to permeate the QQQs as well, if there is a pullback, and that would make that, as I said before, 146 to 145.70s area, very important support in the QQQ. Now, if we look at the SMHs, if you don't mind, I'm going to take a little time here in this kind of opening segment, because I need to, I want to go through this because I want you to understand at least the thinking from our opening call subscribers, how we've tried to be, we've got our bank stock, which has done fabulously. We've got our General Motors, which has done fabulously. We've got stopped out a couple of our smaller low-price stocks for a bit of a profit. We had an experiment yesterday. I'll talk about it in a moment with GE. It was just an experiment, and it was a failure. And what I wanted to do was, I'll do it now. GE had a volume, what I call Chapman wave volume climax. When we took a small position as a long at 23.56 yesterday, and it rallied very nicely. It went all the way to 23.86. I mean, for GE, that's quite good. And then it closed lousy. And then I said to myself, whoa, wait a minute. All the factors that you look for were there, except for the one thing. Please scroll and just do a little Google search and look on the internet to see what was mentioned about GE. Because to get this particular Chapman wave climax volume low turnaround that says for at least 28 sessions, usually it's a daily chart, you can rally. It doesn't tell you how high. You need other technicals to do that. But it says you could rally and not retest the low that was made on that fateful day for 28 days at least. And if it holds very well in the 28 days, you could go 56. You could double it, 56 days. Okay. So what happened was when I went through it, I said, oh, man, that was a mistake. You forgot to look for all the news. There wasn't very much news at all about GE. Yeah, I want almost headline news to say, and just a real throw in the towel kind of volume and smash to the downside. Wasn't there. We got out we went in at 23.56. We were out at 23.20. A very what is a 1.8 or something percent loss. Just I was prepared to do that. Why? Because if it was successful, it would have been a very interesting thing. The more I thought about it in this particular market environment, I'm not sure GE, as Peaky and the Dent says, GE still a bellwether for the economy. No. This was just going to be a trade, and it was a failure within one session. And we got out of it. Thank goodness we were stopped out. Trading now at 22.99. That was an error on my part because I missed the most important link, and that link is what was the news headlines. I need big headlines all over the show to say GE, terrible, and there's this incredible selling climax that occurs. It never worked. What it does say is now the whole area of the 23s to 2024s is going to be tremendous resistance for a little while if there isn't a reversal within the next few days. It's just a bad sign. So, okay. So we did IWM, did Qs. I wanted to go to gold just to show you something very interesting. See, gold's down for 1289. And what we've got here is a single leg A from a trough E in a left side. Oh, I don't want to rush this. Let's do this slowly. There's no real rush. I'm expecting that we're getting a little toppy in the market, so I don't see any rush. We have no new long positions. We'll see what happens. I'll do my back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
If you don't mind, folks, I want to go through the panoply of ideas, and it's like a chess game right now that's going on, and we want to look not one step ahead. We really need to be looking 3 steps ahead, and I'll explain what I'm looking at. You know how in the Chapman wave we look at D's and E's and say, hey, that's where you got to be real careful because that's where you don't have to, but that's where you could get a deeper correction. Well, look at the dollar. The dollar went to a peak E at 94.27, had a perfect Chapman wave, left side, right side. If you use the plumb line right here, the plumb line of the low where we went long, the day of the long, that is right there. So that is on the 8th of September. The low was 91.01. We went long via the UUP, not a great instrument. It's the only thing we've got to go long. And it went ABC, and D was the right time, missed the right price, and that was the target on the left side of the high of 94.14, hit on the 15th and 16th of August. And now what we've got is 2 days later, 3 days later, it spikes above there and goes to 94.27. And on the 6th of October, we get your left side, right side price cup formation with a Chapman wave. You see that green line, that inside, this is the daily chart. Inside, it's called Chapman wave inside wedge target repellent zone on the way up, and it's green on the way down. It's usually pink dashed line, and it's called a target support line. Okay, so it went and it broke it and it stopped exactly on the line 2 days later, 3 days later, above that left side high. Went to 94.27. The MACD is turning down. The histogram's already been turning down. The stochastic had a right shoulder failure pattern. And now this is going to be very important. Is this, based on the weekly chart, a single leg A up that's going to fail? Or the MACD and stochastic, which are starting to improve, and that single leg down? I love strong single leg downs if either a strong leg down or like an A to B to C. It doesn't have to be A to B equals C to D, but a strong, just 2 waves down, trough A, trough B. And then a big move up, because that says you did it all in one shot, the consolidation. However, we're talking monthly charts from 103.82 to 91. That, for the dollar, that's big. One of the biggest declines it's had in a long time. So I'm thinking that the dollar decline could, in a certain way, be done, and that we're going to be watching it closely. But not if at 93.05 it suddenly breaks 92.50's key support, then it's all over. There's no way the dollar's going to come back. At least for this particular phase, you're going to have to wait a while. At the same time, if you're looking at gold, look at the gold. Gold is 12.89, down 4, and it had the single leg A, but in the daily chart, which is making lower lows and lower highs, it had a trough E above the left side, unlike the dollar, which had a test and then a breakout above the left side resistance. This hasn't hit the 1.257, 1,257 low that was made back in August the 8th. And it only went to 1262 on this last move down 4 days ago. So I'm looking at this and saying, yes, a nice big move up, and MACD's turned around, stochastics improved, but there could be a failure pattern based on the weekly chart still being very weak, WEEK being WEAK. And that says to me, within the context of your left side and your plumb line right there, let me just draw the plumb line. This, I love when the mathematical formula is exact. That is, the left side number equals the right side number. As you remember the reason why we went along the dollar was because the dollar DXY weekly chart made an exact 35 weeks up and 35 weeks down, and then turned around, right? And the gold hasn't got any matches like that. It's actually just an inside. It went to a peak D under the major peak that was made peak G back in July the 8th of 2016. So this is really just a counter trend rally at this particular point. And at this stage, we must say that gold is in just a trading range. Don't get carried away. Treat it as if it's a trading range. If you want to go long, just put a stop in. Do everything you want. But I'm just saying, I don't think the big move on gold is ready yet. I am looking at the euro. I'm trying to put the whole thing together, remember? And the euro has had a very strong leg A, and that is a good sign. Shorter term, the weekly chart is really making that arch formation, and it hasn't hit the 1.163 200-period moving average. That's a positive. I just have to hold off. I have to, before I make any big commitments. And if you're looking at the USD JPY, which really was the lead indicator for the dollar, it's arched over but held very well. Sideways formation. Very strong leg A, and after a huge A like this, not going from the 113s down to 111.40, where the 9-period weekly moving average is so far very good. So I'm still kind of favorably inclined towards, yeah, that's a gray A in the euro, remember. So what I'm looking at, USD JPY, look at this big gray A that was made in the dollar Japanese yen back going into the high of December, January of this past year, going into this year. And it's pulled back, and it's gone under the 200-period moving average monthly and is held. It hasn't broken that resistance line. This is a really important phase, and that's the reason why I'm saying that I don't want to get too carried away. I don't want to get overly aggressive going short. And at this point, I'm a little concerned about getting overly aggressive going long. So this is what I want you to put into the theoretical, practical side of it. The US dollar JPY is held well at 112.44. If it closes under 111.70, that's just not a good sign. It says it's probably going to hit 111.43 9-period moving average. The dollar, let me give you the bigger picture. The dollar's acting okay after the big move up from 91 to 94, but it needs to hold 92.50, somewhere around 92.50. It closed below that, and I'm going to have to say, you know what, failure pattern. So everything's very clear. Go to gold again. Gold says if it breaks into the 13.07 area, it's at 1288 right now. As Larry likes to say, these 34-point moves could do it very easily. 34 up takes you exactly there, a little higher. I'm saying, let's see what happens. And this is a point where you're at a potential inflection, deflection stage. Deflect lower in gold. That means it's going to take out 1280, 1275 support. Close under that, and that says not gold needs much more time. A break into the 1307s or so says, hey, very nice action, especially if it's a leg B. Okay, now we can go on. I had a question about natural gas. So natural gas, I'm going to look at this and say, so that was a Greg. Greg, yes. So you went long, I think yesterday you said it's a 2.937. This is that single leg A. It's the same pattern that we've been looking at in so many of the different commodities, going to a D. This gets smoothed out. That's why the letters keep moving around. It's a continuous contract. And it goes to a D right there, also around 919 on the 19th of September. And it goes all the way from the 320s, 3.22 down to the 2.82 level. Trading 2.97. Treat this, the MACD turnaround, V-shaped pattern, the stochastics improving. It's not great, but it's improving. MACD's trying to turn around. Treat it as a start of a move. Don't get too carried away. I wouldn't be aggressive. Why? Look at that big arch formation that closed under the left side low. That says watch out. You have to see the natural gas break above 2.995, the high of the 5th of October. That'll be your sign to say, great. Natural gas is now starting to rally for the old winter time. But in the meantime, the weekly chart is just lousy, and the monthly chart is actually horrible in a leg E to the downside. Treat it as a trade only. We'll get to Sandup's question on MBI in a moment. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi folks, we'll go to crude oil and TLT, etc. in a moment, but I wanted to show you a question here what was the question? A question was right there. Basil, good morning. Good morning. What do you think about NBI for long? Thanks, Sandup. So, Sandup, this is what I'm looking at. It's trading at 7.27, down 23 cents, down 3%. When you got stocks that are very low price, single digits, any little move, 20 cents. Yeah, it's a big percentage, but you got to appreciate, you got to put it into the context. Hey, 3% is a 3% loss, no matter whether you're buying a $727 stock, down $23, or 7.27 down 0.23. But sometimes when they're low price, you tend to buy more. So sometimes the loss or the gains are bigger percentage-wise because of how much you've leveraged. But this is what I'm really looking at. And this is a lesson. I wanted to do this, although it's not technical Chapman Wave Friday. I'm going to do it because it really is a great lesson in the waveform. The last low that was made back on the 24th of March in the daily chart at 7.81 went to a peak A and then an A minus because it failed, but it went down to 7.81 on the 19th of May. The only change in my CD introducing the Chapman Wave methodology, there are 1 or 2 subtle changes, but the only really big change is that it actually doesn't turn out to be such a big change, but it is a change, is that I had said before that if you come all the way back and don't break the left side low, but you're getting real close, then you've got to think of it as a restart when you go back up. I've changed that over the years to say, you know what, if it holds, I'm satisfied that it holds, and you are still in your first leg or whatever it is, you can keep the wave count. But this is what I wanted to show you. You see this move up, and this is for the people that have done Chapman Wave for maybe 10, 12 years already. So I want to just reemphasize because it sometimes comes as a surprise because people forget. You see this leg A, which failed and became an A minus, still active in a sense, but it has an exact low. And therefore, I go inside. You remember, I want to be as forward and aggressive with my wave count to get to a D as possible. I don't want to get to a B or a C and say, oh, man, I'm waiting for the D. But in fact, everything about the technical says, hey, mister, keep looking. This is bad. This is not good. So Over the years, many years now, what I've said is count every single peak and every trough. So if you count every peak, this little peak that was made right here on the 28th of April at 8.93, that's an A. It pulls back, doesn't take out the low, and goes to a higher high at 894 on the 12th. That's B. Call it gray. I didn't have time. I just did it in the break. Call it gray A and gray B. Why? Because it's under the major top. And then what happens, it holds perfectly that 0.71, and it rallies again, and it goes to a peak C, and then it goes to a D. That's where you've got to be careful. But the MACD and stochastic are still good. Goes to the E with a long-legged doji. Remember, well, in this case, not a doji, but a long-legged bar with the wick up and down, very thin but very wide. And that takes you to a high of 10.72 on the 11th of August. And then it makes a little double top, and it breaks sharply below. That's the most important thing, the 200-period moving average, which was also the 9.33 low of the 11th. And it comes all the way down and then takes out that left side low. But you were forewarned because that was an E. Now, if I did a strictly A, B, C, you would have been waiting for the D. Oh, you might have said C1, C2, but that C2 wasn't even close enough. I would want it at 10.55. I definitely would want it closer to 10.67 or something like that to get a decent D. So this is what Chapman wave methodology, and you take out the left side low, you close below it, and today you're below it. This is not good. So I'm going to say to you, Sunday, keep it in mind that the MBIA Inc. Must be in the financial insurance sector or something like that. I would not do anything right now, because even if it makes a candlestick that's good, it's going to have to try for 797, the 9-period moving average, and then come back and retest. I would wait for the retest. Let's talk about it in another few days' time. Keep your eye on it. Have patience. I wouldn't jump into it. Weekly chart has made a peak C with a potential C minus. This is just, whatever it is, it's just not good action at all. It's been failing for a long, long time. So hold off. Next question I had was, let me just run them now. Paul says Apple. Yeah, Apple is in a leg C, and this is an area I think is going to give it a lot of strain between 155 and 158.5, maybe even touch 159. I'm looking to see if that makes the arch formation and it starts a retest of the low that was made in the 149s. I think the upside is very limited in Apple at this particular point, but I'm not yet sure it's a short. I think that it's just upside is limited, but so is the downside. Well, I guess if you want, you can get 6 points by a retest of the low that was made, but I don't see it as a short. I just see it as going nowhere for a while. It's a mature stock. It's really more like a dividend stock at this point. EOG is a question, EOG. So EOG is trading at EOG. What is this? I should know this so well. EOG Resources. Now, this is the same as the IWM. It looks exactly the same. Look, it's gone from the low that was made late August. It's gone peak A, peak B, peak C, and it's just held tight. Okay, I think it has upside limits at 96.86, up 8 cents. I'm going to say that it's going to probably make a D just a tad higher than this high right here, the high of the September the 28th of 98.37. There's kind of a cup formation, almost like a rectangle, but more like a cup formation. Yes, I could think about the oval pattern. I haven't got the highs yet, so it's more the cup formation. And I'm just saying that the MACD and stochastic look like they're going to fail. Could go a tad higher. I'd be careful. I wouldn't be buying it, and I probably wouldn't be shorting it right now, but I suspect the single leg A up with the MACD and stochastic good says that 94 to 92.50 is absolutely, over the next 2 weeks, the critical support level. If it does take out 98.70 to 98.70 to 99.35 and holds, that's going to improve the weekly a lot. The weekly is already taking out the left side high. Yeah, this is actually looking way better. I just don't know if I would buy it right now. I'd probably say I'm going to have to wait. But if you do buy it, you've only got a 1.5 of a stop on the downside, and then you want to be out. And if it holds and it goes a 1.5 up, that weekly is going to improve it. So my bias is that EOG at this particular point is holding very well, taking time. Remember, it's the same pattern we've seen now. And this, patterns repeat. It doesn't matter what sector. Look at the IBB, held for weeks. It went sideways and then went up. Now it's down a little bit. So this is the pattern I'm looking at. We've seen a couple of stocks do this, and then they pop to the upside, but then they come back and retest the breakout. So I think the bias is, at this particular point, says it's holding well, so the bias is more to remain in the buy mode and not go to a sell signal yet. Okay? Now let me go to the IBB, a question about that. IBB, you remember I look at the SMHs, the IBB, a couple of other sectors. We will look at the XLV in a moment. But what I am looking at is the IBB at 337.90, down $1.69. Remember we had a call from Ben yesterday. I said his short position that he took just off the high, that was the best thing because he knows exactly where his risk is. His risk is 1 penny above 342.50, and he's out. So this is starting to move down. I'll talk about it a little more when we get back. I'll be right.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. So I got a whole bunch of questions I'd like to get to. So let me just quickly do this. You've gone to a GC in the IGV. This is the iShares North American Tech Software. It's only in leg B that I can see in the monthly chart. So I'm suspecting it could make just a nominal new high at 149.80. That's a penny above the high it was made the week of the 15th of September. But we've got the Groucho Marx eyebrows V-shaped pattern right now. It reminds you, when I was back a kid in South Africa, growing up, I remember there was an American cartoon strip, the Crows, with Heckle and Jekyll. Yeah, so this is either the Groucho Marx eyebrows or the Heckle and Jekyll eyebrows. And what we've got here is the V-shaped pattern, which says at this point there probably is a limited upside, and then you come back and you should have about a 20 to 25% correction of the last move up. And that would say from the 143s to the one that's called a 151. So you could pull back after making a new high into the 145, 146, even a 50% correction of that leg. So I think that's, but what's really interesting, this is the IGV trading down just 18 cents at 148 something. But if you go to the XLK, and this is what I wanted to get to, XLK is only at peak C if there's no new high today. I think it's going to go to a D, and then we've got to be careful. But only careful on the lettering. The MACDs are very strong in the stochastics at 96. I keep looking at these charts. The rotational aspect says as you're looking at something that starts to appear weak, you could find something equally important that is strong. And the XLK right now, as I'm speaking, is strong. So, and then Dan sent me this thing right now. The Economist, is this week's? Oh my goodness. The bull market in everything. Are asset prices too high? Oh, that's bullish in itself. Okay, so that's the Economist. Now, a couple of questions that I had. Am I expecting like a 3 to 8% correction? You know what? All I'm saying is that I think a digestive phase will be coming. I don't know the percentage yet because I have to see how the MACD's fast-moving average crosses a slow-moving average. That sometimes can give you the projection. We haven't even turned down yet. So I'm doing one step at a time until I actually see the Dow close below 22,000. At this point, it's now 700. Let's call it 22,690. I just have.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today. If you're an active trader